So where are, other than the AI applications, I want to just dig into that idea of data centers and the commitment of money towards it. Where are innovations happening within the data centers?
Yeah, so the demand that we're going to see for AI as some of these applications start to roll out this year and the next year is going to really accelerate. And it's key not just to have an AI that's available, but it's also performant, affordable, secure. And in doing that, it's not just about building out more GPUs, more data centers, but actually increasing the quality of the AI output to be suitable for enterprise use. In that sense, what we're seeing right now is building out kind of the foundation for a lot of different places for technologies to plug in to make this AI better for its customers.
I want to talk optimizing of applications, but can you go to the optimizing of AI infrastructure right now and where you think some of the most exciting moves forward have been?
Efficient chips are clearly an opportunity to address not just the space and the racks that we have to put in the data centers, but also the power that goes into them. And that's one of our portfolio companies, D-Matrix, that makes an innovative in-memory compute architecture for AI inference. The compute and memory are kind of combined into one in a new architecture that also uses chiplets or heterogeneous integration to flexibly maximize the performance of the silicon that you need in a given card.
And that in many ways affects the energy usage as well, power needed, and I know energy innovation is another key area of yours, Michael. But talk to us, therefore, about how we're going to use it in 2025. All I hear is agents, agent force, agentic, no matter how you term it. Is it all about agents?
I'm not going to sound too different from that. I'm a strong believer that this year, the quality of the AI models, the architecture of the agentic applications, they're going to get better and better and attract more attention from companies that want to use them to address their own costs and scaling needs. And we're seeing this come in two directions. Startups that are creating agents or platforms for agents and selling them as services, a sort of SaaS model. The other is the use of the AI itself in these small companies is something to really start to look at. These founders are building the companies with an AI-first mindset that's really quite different, but it's also going to inspire and stimulate larger companies to take note at the efficiencies enabled and adopt this into their own infrastructure.
But I feel like the larger software players have already got the memo, and you're seeing the likes of Salesforce go all in. Who knows where, of course, Microsoft be able to push forwards with its co-pilots. How are you seeing the opportunity of the startups to be able to innovate faster or in a more niche manner?
And fast, as you use the word fast. Velocity is the absolute definitive trend of this era. Everything's moving faster. Companies getting formed faster, funded faster, growing revenue faster. And agents, as they mature and as they become part of the everyday makeup of these companies themselves, are at the same time the product, but also the organizing principle of these companies. And I think that's a different way to look at this from where we expect to see SaaS revenues build up over time, as it happened in the prior couple of years software investing context, to today. The companies are able to accomplish far more with a much smaller team, reach revenue targets far greater than we had expected, and I think they're going to be profitable much sooner than we had otherwise thought possible.
Fast doesn't always bode well for deep analysis and doing your corporate governance, T's crossed and I's dotted. How are you ensuring that the return on investment that seems to be evident is actually happening and is actually going to be re-signed, that these companies aren't just scaling very quickly over a quarter, but they're going to maintain that user base for the next year and the next year?
ROI is the key theme here. It's like, if you are a founder and you are creating an AI product, this isn't just about creating a white paper that your customer might read to see where the ROI could plausibly occur in their organization. This is really an opportunity for those founders to go out and drive those pilots themselves, the customers will see these savings hit their bottom line, thereby driving more consumption of AI. And I think that kind of virtuous cycle is a really big difference from prior eras of AI, where the savings might come in a defrayed expenses or defrayed CapEx point of view. Here, it's about getting higher return on capital, higher return on the company's operations. And I think as a startup, you really have to get serious about the intellectual honesty of it, and your customers must agree with you. Those startups that are able to accomplish that are going to grow 10 times faster than the norm.